If you're on Social Security or Medicare, 5 things are changing right now in August, and most seniors won't hear about a single one of them until it's already too late. 1 affects the actual day your payment lands. 1 is a yearly check the government runs quietly in the background, and if you miss it, your help can shrink with 0 warning call. 2 more touch what you're paying for healthcare and taxes this month alone. I dug through the real SSA and Medicare updates so you don't have to decode confusing government letters yourself. Stick with me, because number 5 is the one almost nobody catches before the deadline passes. Quick note before we get into it. Some of the people you'll meet in this video, like Barbara, Harold, Grace, Arthur, and Nancy, are not real people. They are fictional examples I use to make these updates easier to understand. But every number, every rule, and every date I mention is based on real, current information from the Social Security Administration, Medicare, and the IRS. Now, let's get into change number 1. Let's start with the one that's happening this exact week. Because if you don't know your own payment date, this one can feel like a small heart attack for no reason at all. Picture a retiree named Barbara. She's 68, and she lives outside Sacramento, California. Barbara was born on the 14th of the month. For years, she never paid much attention to which Wednesday her Social Security check landed on. It just showed up, and she moved on with her life. This month, Barbara noticed something odd. Her neighbor down the hall, a man born on the 3rd, got his payment a full week before hers. Barbara started to worry. Did something change with her account? Was there a problem with her file? She almost called Social Security in a panic before she stopped and actually looked at her own schedule. Here's what's really going on. Social Security retirement, survivor, and disability payments are not paid on the same day for everyone. They are staggered based on your birth date. If you were born between the 1st and the 10th, your payment lands on the 2nd Wednesday of the month. This month, that was August 12th. If you were born between the 11th and the 20th, your payment lands on the 3rd Wednesday, which is August 19th this year. And if you were born between the 21st and the end of the month, your payment lands on the 4th Wednesday, which is August 26th. So if you're watching this before August 19th and your birthday falls between the 11th and the 20th, that means your payment for this month has not landed yet, and that is completely normal. It is not late. It is not missing. It simply has not arrived on the calendar yet. There's one more group that works differently. If you started collecting Social Security before May of 1997, or if you receive both Social Security and SSI together, your payment usually comes around the 3rd of the month, instead of following the Wednesday schedule. And if you receive SSI only, your schedule is different again. SSI is normally paid on the 1st of the month. But this year, August 1st fell on a Saturday. Because Social Security never issues a payment on a weekend or a federal holiday, that payment moved backward into July. It actually landed on Friday, July 31st. That means if you receive SSI, there was no separate deposit landing inside the calendar month of August at all. Your next SSI payment after that early one is scheduled for September 1st. If you only watch your account for a payment on the 1st of every month, this is exactly the kind of month that can look like something went wrong when nothing did. Here's why this actually matters, beyond just avoiding a scare. Every year, thousands of beneficiaries call Social Security's national number in a panic during a week like this one, asking where their payment went. Most of the time, the honest answer is, it's coming, just not on the day you assumed. That ties up phone lines and creates stress that a 2-minute check could have prevented. So here's what I want you to actually do today. Open your My Social Security account, or if you don't have one, go to ssa.gov and create one. It takes about 10 minutes, and you'll need your Social Security number and a valid email address. Once you're in, look at your payment history and your benefit statement. Find your birth date range and match it to the correct Wednesday. Then write it down somewhere you'll actually see it. Your kitchen calendar, your phone notes, wherever works for you. Don't rely on memory from last year, because the exact dates shift depending on how the calendar falls. Here's where things get interesting. Because knowing your own payment date is only half the story. The second change this month has nothing to do with when your money arrives. It's about how much of it you actually get to keep once Medicare takes its share. So what exactly changed there? And why are so many seniors seeing a smaller increase than they expected? Let's break it down in simple terms. Let me introduce you to a retiree named Harold. Harold is 72 and lives in a small town outside Columbus, Ohio. Back at the end of last year, Harold heard the good news on the television. Social Security benefits were going up by 2.8% starting in January. Harold did some quick math in his head. He was getting about $2,000 a month, so he figured he'd see roughly $56 extra land in his account. When his new benefit amount showed up on his statement, the number was smaller than he expected. Not by a huge amount, but enough that Harold sat down and called his daughter, wondering if the government had made a mistake. There was no mistake. Here's what actually happened. For 2026, Social Security benefits did increase by 2.8%, which works out to about $56 a month for the average retiree, bringing many people's checks from around $2,015 up to roughly $2,071. That part was accurate. But at the exact same time, Medicare Part B premiums went up too, and this year's increase was a big one. The standard monthly Part B premium climbed to $202.90, up from $185 the year before. That's an increase of nearly $18 a month, and it happens to be one of the largest Part B increases in the program's history. Here's the part almost nobody explains clearly. For most beneficiaries, that Medicare Part B premium is deducted directly out of your Social Security check before the money ever reaches your bank account. So when your raise arrives, the government isn't handing you the full $56 in your pocket. A chunk of that raise gets absorbed by the Medicare premium increase before you ever see it. This isn't a scam, and it isn't a hidden fee someone is trying to sneak past you. It's simply how the two programs interact every single year. But if nobody explains it to you in advance, it can feel like your raise quietly disappeared. There's one more detail worth knowing. If your income was above a certain level based on your tax return from 2 years ago, you may pay more than the standard Part B premium. For 2026, that threshold is around $109,000 a year for an individual, or $218,000 for a married couple filing jointly. If your income was below those numbers, you pay the standard rate. If it was above, Medicare charges what's called an income-related monthly adjustment, and your premium is higher. So what should you actually do with this information? First, pull out your most recent Social Security COLA notice, the letter or online message that tells you your new 2026 benefit amount. Compare the gross increase to what actually landed in your account. That difference is your Medicare Part B premium. Second, if the number you're paying seems unusually high, log into your My Social Security account and check whether you're paying the standard premium or an income-adjusted amount. If you believe it's wrong, because your income changed significantly since that tax return was filed, for example after retiring or losing a spouse, you can request what's called a new initial determination through Social Security to have it reviewed. Third, build this into your monthly budget going forward. Don't assume next year's COLA will feel as big as the headline number, because Medicare premiums tend to rise right alongside it. Here's where things get interesting. Because Part B isn't the only Medicare cost quietly climbing this year. If you take prescription medications, there's a separate change buried in your Part D drug plan that could affect how much you pay at the pharmacy counter. So what exactly is changing there? And why does it matter more for some people than others? Let's break it down in simple terms. Meet a retiree named Grace. Grace is 75 and lives just outside Tampa, Florida. Grace takes 4 prescriptions every month for her heart and her blood pressure. Last year, she got used to a certain rhythm. She'd hit a point in the year where her out-of-pocket drug costs capped out, and after that, her medications became much more affordable for the rest of the year. This year, Grace noticed her pharmacy bill felt a little higher earlier in the year than she remembered. She wondered if her plan had changed without telling her. Here's what's actually going on. For 2026, the maximum amount most people pay out of pocket for Part D prescription drugs, before hitting the catastrophic coverage cap, increased to $2,100, up from $2,000 in 2025. That might not sound like a massive jump, but if you're managing a fixed retirement budget, An extra $100 before your costs level off can matter, especially if you take several medications or one particularly expensive one. At the same time, the maximum deductible that a Part D plan is allowed to charge also went up, from $590 in 2025 to $615 in 2026. Not every plan charges the maximum deductible. Some charge less or none at all, but plans are allowed to charge up to that new higher amount. These increases are tied to rising healthcare costs across the board, the same reason your doctor visits and hospital stays generally cost more than they did 5 or 10 years ago. It isn't a punishment aimed at seniors specifically. It's simply how the numbers get adjusted every year. Here's why this matters right now. In August, Medicare's open enrollment period runs every fall, typically from October 15th through December 7th, and that's your window to review your current Part D plan and compare it against other options for the coming year. Waiting until December to think about this for the first time doesn't give you much time to make a good decision. August and September are actually a smart time to start paying attention, because your current plan will send you what's called an annual notice of change letter sometime in the fall, and that letter is one of the most important pieces of mail you'll receive all year. So here's what I want you to do. First, gather your current list of medications, the exact drug names, dosages, and how often you take them. Second, when your annual notice of change letter arrives this fall, do not set it aside like Grace almost did. Open it and read through what's changing about your deductible, your premium, and which pharmacies and drugs are covered. Third, when open enrollment begins in October, use Medicare's official plan comparison tool at Medicare.gov or call 1-800-MEDICARE to check whether your current plan is still your cheapest option or whether switching could actually save you money for the coming year. A lot of people stay on the same plan out of habit for years, without realizing a different plan might cover their exact medications for less. Here's where things get interesting, because so far, we've talked about payments and premiums, but the next change involves money that some of you may already be owed and might not even know it. So what exactly is this update, and why is it still relevant in 2026? Let's break it down in simple terms. Let me tell you about a retiree named Arthur. Arthur is 74 and worked for over 30 years as a firefighter for a city government in Illinois. Because his firefighter job had its own pension system, it didn't pay into Social Security. But earlier in his career, Arthur also worked at a private company for about 12 years, and during that time, he did pay Social Security taxes. For years, Arthur's Social Security check was reduced because of a rule that treated his firefighter pension as a reason to shrink the Social Security benefit he'd earned from his other work. That rule was eliminated by law back in January of 2025, when the Social Security Fairness Act repealed it completely, along with a related rule that had been cutting or eliminating survivor benefits for hundreds of thousands of widows and widowers whose spouses had government pensions. Here's the part that's still relevant right now. In August of 2026, the Social Security Administration has been working through millions of individual accounts to apply these corrections, sending out retroactive lump sum payments covering the period back to January of 2024, along with permanently higher monthly amounts going forward. According to the agency's own reporting, they've been completing the bulk of these adjustments faster than originally expected throughout this year. The average retroactive payment issued so far has been around $6,710. But faster than expected doesn't mean everyone is done. If you worked a job with a pension that didn't pay into Social Security, whether as a teacher, police officer, firefighter, or certain federal employee, and you also have Social Security from other work, or if you're a widow or widower whose survivor benefit was reduced or eliminated because of a government pension, it is still worth checking your own account directly. Some cases are more complicated than others and take longer to process, especially situations where a survivor benefit application was denied outright in the past and needs to be reopened rather than simply recalculated. Here's exactly what to do. Log into your My Social Security account and pull up your benefit statement. Look for any line referencing the windfall elimination provision or the government pension offset. If you see a reduction still listed there, and your monthly amount hasn't gone up since early 2025, your correction likely hasn't been completed yet. From there, call Social Security directly at 1-800-772-1213 and ask specifically whether your account has been fully corrected under the Social Security Fairness Act. If you're a widow or widower whose survivor benefit was completely eliminated in the past, ask directly whether your case requires a brand new survivor benefit application, because some of these cases cannot be fixed automatically. They have to be reopened by request. Here's where things get interesting. Because our fifth and final change isn't about a payment or a premium at all. It's about a deadline that's coming up next month, and if you miss it, it can cost you money you didn't expect to owe. So what exactly is this deadline, and who actually needs to worry about it? Let's break it down in simple terms. Meet a retiree named Nancy. Nancy is 69 and lives outside Phoenix, Arizona. Nancy receives Social Security, a modest pension from her old job, and she takes some money out of her retirement account most years. Because none of those income sources automatically withhold enough federal tax on their own, Nancy has always made quarterly estimated tax payments to stay caught up with the IRS. This year, Nancy heard about a new tax deduction available to seniors starting with the 2025 tax year and continuing through 2028. Depending on income, it can be worth up to $6,000 for an individual or up to $12,000 for a married couple who both qualify and file jointly. When Nancy heard about it, she assumed it would cover whatever she owed this year, so she didn't bother adjusting her quarterly payments at all. Here's the important thing to understand. That senior deduction reduces your taxable income. It does not change the separate formula that decides how much of your Social Security benefit counts as taxable in the first place when combined with your other income. Those are two different rules working side by side, not one replacing the other. Assuming the new deduction wipes out your entire tax bill, the way Nancy did, is exactly the kind of mistake that catches people off guard at filing time. Here's why this matters specifically in August. If you make quarterly estimated tax payments, meaning you don't have enough tax automatically withheld from your income throughout the year, your next payment deadline is September 15th. That's just a few weeks away from when this video is going live. This is your window to sit down, look at your actual income for the year so far, and figure out whether you're on track or falling behind, while you still have time to fix it. So here's what I want you to do this week. Pull out your most recent Social Security benefit statement, along with any pension or retirement account withdrawal records you have for the year so far. Add up your total income, then either speak with a tax professional or use the IRS's own withholding estimator tool available on IRS.gov to check whether you're on pace to owe money at filing time or whether you're already covered. If you discover you're behind, you still have time before September 15th to send in an estimated payment or to adjust your ongoing withholding through a simple form filed with Social Security. Finding this out now, in August, gives you options. Finding it out in April usually doesn't. Now, before we wrap up, I need to spend a moment on something that connects to every single one of these 5 changes, because scammers pay just as close attention to the news as we do. Every time there's a real, legitimate update, whether it's a payment date shift, a Medicare premium change, a Social Security Fairness Act correction, or a tax deadline, criminals use that exact same news to make their scam calls sound believable. You might get a call, text, or email claiming to be from Social Security, saying there's a problem with your payment this week and they need to verify your bank account information. You might get a call claiming to be from Medicare, saying your new premium requires you to confirm your Medicare number immediately or lose coverage. You might get a call claiming you're owed a Social Security Fairness Act payment right now, but you need to pay a small fee or provide your card number to release it. Here is the one rule that protects you from all of it. Legitimate government agencies do not call you out of nowhere and demand your Social Security number, your bank account number, a one-time security code, or payment through a gift card, wire transfer, or cryptocurrency to release money that's owed to you. If someone contacts you first and pressures you to act immediately, hang up. Then look up the official phone number yourself, either on SSA.gov, Medicare.gov, or IRS.gov, and call them back using that number, not the one the caller gave you. Now let's bring everything together into one simple checklist you can actually use this week. Number 1. Check your own Social Security payment date based on your birth date and mark it on your calendar so a normal schedule shift never looks like a missing payment again. Number 2. Compare your new 2026 benefit amount to your old amount and confirm how much of that increase is being absorbed by your Medicare Part B premium so your budget reflects reality. Number 3. Gather your current medication list now and read your annual Notice of Change letter carefully this fall so you're ready to compare Part D plans during open enrollment in October. Number 4. Log into My Social Security and check whether your account shows a windfall elimination provision or government pension offset correction still pending, and call Social Security directly if it does. Number 5. If you make quarterly estimated tax payments, review your income now and make sure you're on track before the September 15th deadline, using the senior deduction correctly instead of assuming it covers everything. 5 updates. 5 simple checks. None of them require panic, and none of them require an expert sitting across the table from you. They just require you to know what's actually true instead of guessing. If today's video helped clear up something that felt confusing, share it with someone you know who's 65 or older. A parent, a neighbor, a friend from church, anyone who counts on Social Security or Medicare the way you do. A lot of these updates never make the evening news, and honestly, most seniors only hear about them from each other. And if you're not subscribed to Robert Preston Updates yet, now's a good time. Turn on that notification bell too, because we cover exactly this kind of update, in plain simple language, every single week. Thank you for spending this time with me today. Take care of yourself, and take care of your money.